How is everybody doing? Welcome back to another episode of The Banker Next Door. I am your host, Dr. Joe Berquist. Today, I wanted to get into SBA lending. I wanted to talk a little bit about why banks do not like to embrace SBA lending. I saw a great article in Bank Director, which, interestingly enough, this article actually pushes for SBA lending. It's basically saying, hey, you should get in to SBA lending, but then it points out some of the reasons why banks are hesitant or don't want to fully go down the SBA route. And I thought that was perhaps more interesting. And this is something that I know a lot about, having created and basically ran an SBA department in one of my prior banking lives. I thought I would bring this into everybody. So this article from Bank Director is called Embracing SBA Lending in Difficult Times. With the right expertise, partners, and technology, SBA lending can become a seamless and profitable extension of your bank's lending strategy. So, when uncertainty strikes, the tendency of every risk manager is to tighten credit parameters, effectively closing the credit box in the process. We've seen it time and time again, whether during economic downturns, market volatility, or regulatory shifts. The instinct to pull back is understandable, but in doing so, you risk sending the message to your customers that you are not as interested in being their financial partner. As a result, those customers feel as if they were being pushed toward alternative lenders that charge higher rates and often lack the personalized support small businesses need. Instead of retreating, banks should be doubling down on a proven solution: small business administration lending. The SBA's loan programs provide banks with a powerful way to serve small businesses while mitigating risk. The SBA's guarantee reduces exposure, making it an ideal tool for banks to extend credit when they might otherwise hesitate. More importantly, it enables banks to strengthen their relationships with small business clients, capturing a customer base that is not only massive but eager for local banking relationships. The opportunity. Small businesses are the backbone of the U.S. economy. According to the U.S. Small Business Administration, there are 33 million small businesses in the U.S., accounting for 44% of economic activity and nearly half of all U.S. jobs. Despite their scale and significance, small businesses continue to struggle with access to capital, particularly during times of financial tightening. A recent survey by Lumos Data uncovered a critical disconnect. Small businesses want to bank with their local institutions, but they often can't get the financing they need from them. When turned away, they are forced to seek funding from alternative lenders, many of whom charge exorbitant rates and lack the relationship-focused approach that small business owners value. Here's the reality. Your customers are going elsewhere, but they aren't happy about it. The question is, why wouldn't you serve them yourselves? And here is the interesting part. So why banks hesitate? Despite the clear demand, many banks still avoid SBA lending. When asked why, institutions typically cite the following 5 reasons. Number 1, we don't have the internal expertise. Number 2, we've had bad experiences with SBA loans in the past. Number 3, the process is too complex and time consuming. Number 4, we don't have the staffing to manage it. And then number 5, we don't see enough demand. So each of these concerns is valid, but none is insurmountable. Banks that have successfully implemented SBA lending have done so by leveraging third-party SBA loan servicing providers, otherwise known as LSPs, that specialize in managing the process, ensuring compliance, and streamlining operations. These partners eliminate the burden of SBA lending while allowing banks to capture significant lending opportunities without materially increasing their risk. The power of SBA lending. A well-run SBA business line can transform a bank's commercial lending strategy. By implementing an SBA lending program, banks can extend credit access while mitigating risk through government guarantees, strengthen relationships with business clients by meeting their financing needs, capture non-traditional borrowers who might not qualify for conventional loans, increase fee income and profitability through SBA loan incentives, enhance community impact by supporting job creation and economic growth. Banks that actively participate in SBA lending don't just help their customers, they future-proof their own lending portfolios. Really? We'll get back to that. SBA lending in 2025. As economic uncertainty continues to shape the lending landscape, SBA lending represents an opportunity that banks can't afford to ignore. Small businesses are actively looking for partners who understand their needs and provide capital on fair and sustainable terms. If your bank isn't offering SBA loans, you're not just missing out on business, you're pushing your customers toward high-cost lenders who will gladly take them off your hands. The good news, it's easier than ever to get started. With the right expertise, partners, and technology, SBA lending can become a seamless and profitable extension of your bank's lending strategy. Small businesses need you. The only question is, will you step up to serve them? So, okay. Great article. Love the pom-poms, love the cheerleading for the SBA. That's great. And again, not that any of the stuff in here is untrue. It is true. I mean, there is a lot of stuff here that you can do with this, but there's a huge but here. So I want to go back here to why banks hesitate. So I want people to understand a couple things about the SBA. Number one, the SBA is not a direct lender. I mean, so many people think, I've had so many people over the years to come in and say, well, I don't understand. Why wouldn't the bank want to make this loan? The SBA is making the loan, so why wouldn't the bank want to do it? It's no. People totally misunderstand it. The bank is always the direct lender. The bank is always lending you the money. The SBA is not a direct lender. What the SBA does is they provide the bank with a guarantee. It's a guarantee on the loan that you've made. Now, do they guarantee 100% of that loan? No, they do not. They guarantee 75% of that loan. So there's a 25% risk to the bank. That risk can be a lot more, and I'll get to that in a minute. But people just need to understand that what the SBA is doing is they're providing a guarantee for the bank, and this does help. It does help immensely because it creates a platform in which the bank would make a loan that it otherwise would not normally lend. And most of the time with SBA loans, you're making a loan that is basically devoid of collateral. You don't have enough collateral, and if you're making loans to startups, you really don't have cash flow. You have a projection of what you hope the cash flow will be, but you don't have any cash flow at the moment when you're making that loan if you're making it to a startup business. So a lot of times, again, cash flow, collateral, your two biggest items in lending, and those are the things you don't necessarily have with an SBA loan, and this is why you use the guarantee to kind of get you across the finish line. Okay, now, that being said, what you have to understand about how the SBA operates, think of the SBA as an insurance company. I've always felt like that's the better way to think about the SBA. If you think about the SBA in those terms, you will understand the SBA a whole lot better. You will understand why they do the things they do. Most bankers, okay, so in other words, think about it this way, like you're making this loan and you're buying an insurance policy, and that's what the SBA guarantee is. So if it goes bad, I'm going to go back to the insurance company. I'm going to say, hey, I need to file a claim. I had a loss over here. I need to file a claim. I need you guys to make me whole, because that's what I paid for the insurance for. But like any good insurance company, they're not going to honor that claim right away. They're going to try to shaft you first. I'm sorry, I hate to be that cynical, but anybody who's been around the block a few times understands what I'm trying to say there. So yeah, when you have an SBA loan that goes bad, the first thing that you're doing is you're sending that file down to the SBA lawyers. And the first thing that they're going to do is they're going to comb through that file, and they're going to try to find 5 different ways to deny your claim. Oh, sorry, you didn't get this signed. Or, oh, sorry, you didn't cross your T here. You didn't dot your I there. So we're going to deny this. Okay. You guys can go work this out yourselves and figure it out. Okay. Now, if they are willing to honor the claim, the next thing they say is, okay, would you like to work this out together? And then we'll basically split whatever it is we get. Or, you could put forth your guarantee. You'll get whatever, you'll get the 75% guarantee, and then the SBA will collect, and then you go from there. But the bank, I should say the SBA will have to collect. The bank always has to collect. The bank always has to collect and then put it in to put it back through. But the SBA will pay the bank to get the, basically honor the claim, so to speak. But it gets very messy. It gets very messy, and it's not an easy process. And so that's why we get to number one here. We don't have the internal expertise. And then number two, we've had bad experiences with SBA loans in the past. That's what I mean by the bad experiences. The process is too complex and too time consuming. So now let's talk about The SBA has what's called an SOP, a standard operating procedure. This document is, I forget the last time, it's 400 pages long. It is very complex. And part of the problem, when I first got into banking 25 years ago, the SOP used to change every 5 years, and the changes normally weren't that significant. Starting around, I would say 2010, the SBA started changing the SOP like every year, and not just little changes, major changes. So if you were not, if you were not a student of this, and if you don't know that SOP like the back of your hand, and you weren't really keeping up to date on what was going on, you were gonna end up having problems, because sooner or later something was gonna go bad, and the SBA was decline it, and they were gonna say, well, you should have gone back to the SOP, and you're like, well, this was the SOP, that I had, but but we've changed that SOP, 10 times in the last 5 years. Oh, okay. And that's what they get into by the process is too complex and too time consuming, and that, we don't have the staff to manage it. Now, number 5 is an interesting one. We don't see enough demand. Yeah, I don't know that one necessarily holds water. I mean, obviously, there's a lot of demand out there. There's a lot of loans that banks could do. They could do it through SBA for sure, but they don't do that. But again, I just get back to, I just want people to understand that like SBA lending is great and it serves a very valid purpose. I definitely say that, yes, should banks use the SBA and should do SBA lending? Yes, they should. However, there are big buts there. You do have to understand what you're doing, and they do say in here, oh, well, just go out and hire an LSP, a third party SBA loan service provider. Yes, you can do that. I did that as I alluded to earlier, when I set up and ran an SBA department, I used an LSP to basically try to outsource a lot of the more manual things that you have to do there. But that's not like a silver bullet. That's not like a catch-all of all things. You also have to be cognizant of what the LSP is doing, and you have to consider, like, are they doing it the right way? Are they helping us, or could they be hurting us? Because thankfully I worked with a great LSP, had a good experience, and everything went well for the most part. But I've seen other banks that have not. They had LSPs that didn't do a good job and caused the bank all kinds of problems. And, and at certain times it got very ugly. So again, just a lot to consider here. But again, I did this episode because I thought it was more interesting, instead of to just get the pom-poms out and say, oh yeah, let's do SBA lending. I wanted to point out, I liked this part of it, why banks hesitate. A couple of reasons here why banks would sit there and say, yeah, we really don't want to get into SBA lending, or SBA lending is just not our cup of tea. Because I think a lot of people from outside, who maybe, don't work in banks, haven't worked in banks, don't really understand the whole, what goes on behind the scenes, and why wouldn't a bank want to do an SBA loan or make me an SBA loan? And then there's also employees in banks that basically sit there and go, "Why, I don't understand. Why don't we do SBA lending? Why don't we offer this product to our customers?" Like, they haven't had some of the experiences that perhaps their bosses have had with SBA lending over the years. So again, that's why I thought this was very interesting. Thought people would find it very interesting. It was a very interesting article. Again, in the months and years to come, I will undoubtedly talk a lot about SBA lending, the various facets of it, the different programs, all the different things that go into it. But we will save that for another day. So I will wrap up by saying, if you like this episode, please make sure to like, share, and subscribe, as that always helps the channel. Remember, we are on YouTube, Rumble, and all major podcast platforms. Please be sure to leave your comments down below, as I always love getting back to everybody. And as always, make sure to check out some of the other content on the channel. I hope everyone has a great day out there, and I'll see everyone again real soon. Thanks a lot.